This is the Daily Market Comment at XM.com by Marios Hadjikyriacos. I'm Christina Marujos. The FX market continues to dance to a risk-on tune. Investors seem to be scaling back their defensive exposure, mainly on hopes that something positive may come out of the U.S.-China trade talks in October. The question now is whether this recovery in risk appetite is sustainable. In this respect, markets seem to be getting ahead of themselves in pricing progress on trade. We have seen the two sides meeting in person and striking an optimistic tone before, only to see matters escalate again a few weeks later. The bottom line is that nothing has changed drastically enough to warrant any real optimism on trade, something that the stock market seems to be coming to terms with, judging by the sideways moves lately. Hence, this recovery in risk appetite looks fragile, and a single negative headline could unravel it. For the yen specifically, some recent reports that the Bank of Japan will debate whether to add more stimulus next week may have also led traders to close some of their long positions. However, it's doubtful just how much the BoJ can do at this stage, as it already has a massive stimulus program in place and therefore has very limited room to ease any further. Therefore, the broader outlook for the yen remains bright. The bank has less firepower to ease than its major peers, so in an environment where the Fed, ECB, and BoJ are all easing, the yen would likely outperform the dollar and euro as relative interest rates narrow in Japan's favor. Elsewhere, President Trump fired John Bolton yesterday, his infamous national security advisor. Bolton is a major hawk on foreign policy issues and was a driving force behind some of Trump's most aggressive geopolitical moves. Hence, his departure may have painted a brighter picture for U.S.-Iran relations, something that oil prices did not like, with WTI sliding on the news. Today, oil traders will keep an eye on the weekly EIA crude inventory data, as well as OPEC's monthly report. Thank you for watching the Daily Market Comment at XM.com.